Thank you for having me. It's certainly a halfway decent way to end the month here with corn and wheat kind of leading the way higher and corn and beans kind of reversing roles here. As corn saw some great export data this morning for the first time in a long time. We saw weekly export sales of about 1,928,000 metric tons, or about 75.9 million bushels. That is a marketing year high. 35% above last week and about 54% above the 4-week average. So that dark cloud of demand that's been hovering over the corn market potentially getting alleviated here, but we need to see this be more than just a flash in the pan. We need to see this on a more consistent basis. We've been working with guys here over really since the beginning of the week, kind of carve out a game plan in case we start to see some positive headlines out there. And volatility is really low. The CVOL index, the volatility index for corn, is at its lowest level since February. So volatility is low. Options are relatively cheap. So if you made some cash sales and don't really want to miss out on a rally and re-own some stuff on the board, options are a great tool in this environment.
I saw that number too, and I thought to myself, boy, isn't it funny how you drive corn down to 460 and all of a sudden you start selling more of it, right?
Yeah, absolutely. It's almost as if those global buyers are aware of some of these seasonal tendencies that we see in the corn market.
Right. I mean, that's the issue here. It's like, shame on me for being surprised. I mean, you beat up corn to the year's lows, and all of a sudden it's flying off the shelves. Maybe there's a correlation there. I don't know.
Yeah, well, low prices cure low prices. Unfortunately, that's not the situation we have in the soybean market. We're kind of at an inflection point, $13.50 for that January contract, kind of a lot hinging on South American weather. If it stays hot and dry down there, potentially we break out. If we get some favorable weather, back to $13. So I think if you've got a lucky quarter, it's time to bust it out for soybeans.
I agree. All right, stay right there. We're going to go away and pay some bills. We're going to come back and talk more with Oliver Sloup. He's with Blue Line Futures, and he's in Chicago. We'll be right back after this. Let's bring back in Oliver Sloup. He's with Blue Line Futures in Chicago. Oliver, anything jump out at you when we talk about those prices?
Well, it certainly doesn't look good on the board today, but I think today's price action, this week's price action actually as a whole has been relatively constructive. We saw a rally back in live cattle and feeder cattle to last Friday's breakdown point. We stalled there yesterday, pulling back today, but we're off the lows, as you had mentioned, and marking a higher low right now. So if we can get a higher low here to round out the week, I think that bodes really well going forward into next week's trade. We can see some buyers step back into the market. Over the summer months, my big concern was the risk of long liquidation. Well, now that we've seen funds liquidate majority of their long position, they were net long north of 100,000 contracts. As of the recent Commitment to Traders report, they're only long about 30,000 contracts, which is a relatively neutral position. So that risk of long liquidation has evaporated some. And if we see the cash market stabilize, I wouldn't be surprised to see some of these participants maybe make their way back into the market as we turn the calendar over.
Yeah, I agree. Then, there's some technical things that a few other analysts have mentioned, and say even corn just above $5 between, say, 5 and 5.15. I don't have all the exact numbers, but that might be another place that we could start to see some farmers let some stuff go here after a nice 20, 30, 40-cent rally. What do you think?
Yeah, absolutely. I think that's very viable and a realistic expectation to see that. One of the other markets that we're keeping a close eye on is that hog market. It looked like we were just going to continue to roll over earlier in the week, but we've strung together 3 consecutive days of higher prices, which I think looks really nice. We filled the gap from last Friday as well. So we're back to last Friday's really breakdown points. If we can get some strong closes to round out the week and to the first day of the new month, I think that really bodes well, setting us up into the end of the year.
Great stuff, great content, great way to finish out the show. Really appreciate your content. Thank you very much. That's Oliver Sloup. He's with Blue Line Futures in Chicago. I'll bring it back here to Nashville just one more time. Give it to you.
Scott, of course, looking at the close of the markets coming up in